All right, Canada, let's talk about the economic wrecking ball that's currently hitting our country. The source? Donald Trump's trade tariffs. But not just the tariffs themselves. It's his complete inconsistency on what's happening, when it's happening, and whether it's happening at all. Consumer confidence has collapsed. The loonie is getting hammered. Interest rates are about to drop, but not for the right reasons. And the cost of living is about to skyrocket. And you know the worst part? We're flying blind. One day, Trump is announcing massive tariffs on Canadian goods, steel, aluminum, auto parts. The next day, his administration is walking it back. Then a week later, they're doubling down. And this lack of direction is wreaking havoc on Canada's economy. So let me break down exactly how this is hurting you. Whether you're a homeowner, a renter, a small business owner, or just someone trying to make ends meet. Let's start with consumer confidence because it's completely collapsed. According to various reports, consumer confidence dropped 12.1 points in February, the third largest drop on record. Nearly 34% of Canadians now believe their financial situation has deteriorated. 63% of Canadians believe this is a terrible time to make a major purchase. And guess what major purchase they're talking about? Housing. This is what economic chaos does. It freezes consumers in their tracks. You stop spending, you stop buying, you wait, and that's exactly what's happening. Home sales in Toronto dropped 28.5% last month. Inventory is surging in Vancouver, up 32% year over year. New car sales, tanking. Why? Because no one knows what the hell is happening with these tariffs. And it gets worse. Now here's where things get tricky. With consumer confidence in the toilet, bond yields have crashed because money is flooding into safe investments. And when bond yields fall, guess what happens? Fixed mortgage rates drop. The market watchers are now predicting we could see a 5-year fixed mortgage rate fall into the low threes by the summer. Some insured mortgages could touch even lower. And at first glance, you might think, great, cheap mortgages. Wrong. This is not good news. This is the market bracing for an economic disaster. Because the reason rates are dropping isn't prosperity, panic. Banks are already seeing mortgage delinquencies creep up in Ontario and BC. People are already struggling with cost of living increases. And now, with the threat of tariffs, we're about to enter a recessionary spiral. Lower mortgage rates? Sure. But higher grocery bills, higher energy prices, and less job security? Absolutely. Now, let's talk about the loonie because it's getting annihilated. Red flags such as the loonie has dropped over 7% since the first round of tariff announcements. This is driving the raw metals price index up 11.2% year over year. Input costs for manufacturers are skyrocketing, and that's about to hit your wallet. Here's how it affects you directly. Groceries. Anything imported, produce, canned goods, packaged items will get more expensive. Cars? Any car manufactured with US parts will surge in price. Home repairs and renovations? Materials like wood, steel, and drywall expect a huge markup. And here's the kicker. The Bank of Canada can't do anything about it. Why? Because the more they cut interest rates to keep the economy afloat, the weaker the loonie becomes, making imports even more expensive. It's a vicious cycle, and it's entirely being driven by Trump's erratic tariff policy. Now let's shift to business investment, because this is where things get downright scary. The CFIB Business Confidence Index collapsed by 5 points in February. Manufacturers and wholesaler sentiment is at a decade low. Investment intentions have flatlined. The translation here, businesses are slamming on the brakes for hiring. They're halting expansion plans. They're cutting operating budgets. And why wouldn't they? If Trump keeps a 25% tariff on Canadian goods, many small and medium-sized businesses in manufacturing and logistics will simply shut down. This is the economic threat. It's real. It's not just inflation, but actual job destruction. And what I fear the most, inflation will spike again in late 2025 as input costs and input prices skyrocket. The Bank of Canada will be forced to reverse rate cuts in late 2025 to combat rising inflation. Home prices in major cities could see another sharp decline as consumer spending freezes. So in plain English, this tariff roller coaster could cause higher mortgage rates by 2026, higher cost of living for years, and a slower housing market recovery. All because Trump can't make up his mind about these damn tariffs. I'm sure Americans really appreciate the economic uncertainty that this administration will cause for all Americans, Democrats and Republicans alike. All right, so what should you do in the face of this chaos? If you're renewing a mortgage, lock in a rate now for 120 days and have options. If you're considering selling your home, do it before consumer confidence worsens. If you're planning a major purchase, expect higher prices for imported goods. But most importantly, don't ignore what's happening. This isn't a temporary blip. This is a major economic shift. And the biggest takeaway, the Bank of Canada will have no choice but to lower rates aggressively, but it won't fix the underlying cost of living crisis. All right, folks, let's land this plane. Consumer confidence is toast. Mortgage rates are falling, but for the wrong reasons. The loonie is tanking, so expect higher prices. And business investment is freezing. All of this triggered by Trump's erratic tariff policies. So here's my question to you. Are you feeling the impact of these tariffs already? Is your job, mortgage, or business being affected? Drop a comment below. Let's have this conversation. And before you go, hit like, subscribe, and share this video with anyone who needs to stay ahead of this chaos. This is Vince Gaetano from OwlMortgage.ca. Thanks for listening. And remember, the Wise Old Owl is here to help you navigate through the noise and provide insight to the financial chaos in this crazy, crazy environment. Stay informed, stay vigilant, and together, let's chart a path to financial stability. Cheers.